20 years ago, Tesla and BYD both embarked on the dream of building new energy vehicles. Today, Tesla and BYD are the only two companies in the world with a production and sales scale of new energy vehicles reaching millions and maintaining stable profitability. Looking ahead to 2030, Tesla aims to produce and sell 20 million vehicles, and BYD's president Wang Chuanfu predicts a 70% market share for new energy vehicles in China. With BYD's market share, sales are expected to exceed 10 million vehicles. Based on these figures, the sales of these two companies in 2030 will account for about one-third of global automobile sales. Their development models are completely different and have no connection. Tesla adopts a classic model strategy, launching a small number of core products to initially capture the high-end market and then penetrate the low-end market. On the other hand, BYD employs a multi-model strategy, first gaining an absolute advantage in the low-end market and then aiming for the high-end market. So far, both strategies have been remarkably effective. However, as the prices and positioning of their vehicle models become increasingly similar, competition between them intensifies. In 2022, Tesla's sales growth rate slowed, and order volume decreased, while BYD's sales doubled. In the 200,000 to 300,000 renminbi China's market where the two directly compete, the sales of BYD's Han and Tang models are nearly on par with the combined sales of Tesla's Model 3 and Model Y. In order to maintain competitiveness, Tesla began reducing prices in October 2022, triggering a fierce price war in the Chinese automotive market. Although Tesla's price cuts affect all products in the 200,000 to 300,000 renminbi price range and the car manufacturers behind them, the sales volume of new energy products for each company is relatively low, and Tesla's true competitor is only BYD. Currently, Tesla and BYD have similar sales, production capacity, and gross profit levels. As the growth rate of the new energy vehicle market gradually slows, a war between the two is inevitable, and a real showdown is about to begin. In today's video, let's talk about BYD and Tesla and explore why the global champion in new energy vehicles will definitely emerge between them. Why is a showdown between these two inevitable? Before 2019, BYD struggled to survive by relying on government subsidies and sales of gasoline vehicles priced at around 100,000 renminbi, and its net profit was on the verge of losses after deducting government subsidies. Tesla, on the other hand, was in a strong period. With the construction and operation of its Shanghai factory, Tesla broke through its production capacity bottleneck, reduced manufacturing costs, and experienced rapid global sales growth. The period from 2019 to 2021 was a phase of increased investment for Tesla. Its research and development expenses, fixed asset investments, and total fixed assets almost doubled. However, from 2022 to the first quarter of 2023, Tesla's expansion started to slow down. Currently in a weak period, Tesla can only stabilize its situation by lowering prices. BYD, on the other hand, is in an aggressive expansion period. BYD's turning point occurred in 2021 when Blade battery and DM hybrid technology were widely applied, significantly enhancing product competitiveness and achieving rapid sales growth. In 2022, BYD's sales volume reached 1.87 million vehicles, surpassing Tesla's 1.31 million vehicles. So, what kind of losses did the price war cause for Tesla and BYD? Faced with a decline in the overall automotive market and increased competition from rival models, price reduction has always been Tesla's main strategy. Tesla's average vehicle price and gross profit margin are higher than the industry average, allowing for significant room for price reductions. Order data indicates that Tesla's price reductions have had a significant impact. However, financially, launching a price war has come at a cost for Tesla. Since the price war began, Tesla's gross profit margin has notably declined. In the first quarter of 2023, it dropped to 19.34%, compared to a full-year gross profit margin of 25.6% in 2022. Similarly, the net profit margin has been severely affected, decreasing to only 10.77% in the first quarter of 2023, compared to a full-year net profit margin of 15.45% in 2022. In other words, Tesla's gross and net profit margins in the first quarter of 2023 have gone from being industry-leading to above average within the industry. If Tesla's price reductions are not based on technological or model innovations but are achieved through sacrificing profits, its high valuation in the stock market may be difficult to sustain. After the financial data for the first quarter of 2023 was released, Tesla's stock price fell significantly from around $180 per share to around $160 per share. In the price war, the sales of BYD models priced above 200,000 renminbi that overlap with Tesla's Model 3Y have been significantly affected. However, the overall impact is limited because in 2022, approximately 70% of BYD's sales came from the market below 200,000 renminbi, and the company continues to perform strongly in that segment. Therefore, overall, since the start of the price war, BYD's total sales have remained stable. Its financial performance has also become healthier, with the gross profit margin increasing from 17% at the end of 2022 to 17.86% in the first quarter of 2023. In fact, the price war in the first quarter of 2023 was just a warm-up. The real competition will unfold in 2024. Tesla CEO Elon Musk has expressed concerns about macroeconomic risks and the possibility of an automotive market downturn on multiple occasions. As Tesla's expansion pace becomes more conservative, the company is also striving to reduce debt. In the first quarter of 2023, its long-term liabilities stood at only $1.272 billion, compared to a high of $11.6 billion in 2019. The debt-to-equity ratio also dropped to a historic low of 43.4% in the first quarter of 2023. Wang Chuanfu, on the other hand, remains confident in BYD's continued high-speed growth. Firstly, he believes that although the growth rate of China's new energy vehicle market may slow down, the annual absolute increment will still reach millions of vehicles. Secondly, BYD is striving to expand its presence in overseas markets, which will become the second growth curve for BYD. Due to this relative optimism about the future, BYD has been more aggressive in its investments, with its debt-to-equity ratio reaching a historic high of 77% in the first quarter of 2023. Overall, in 2024, a head-on collision between Tesla and BYD seems inevitable. In 2024, Tesla's entry-level car will hit the market, the pickup truck will contribute significant sales, and it is highly likely that a new generation of the Model 3 will officially debut. As projected, Tesla's 4680 battery will also reach full production capacity in 2024, enabling large-scale deliveries. This will give Tesla similar vertical integration capabilities as BYD and bring significant cost advantages, which will have a tremendous impact on the entire new energy vehicle market. However, in the current weak market cycle, how can Tesla ensure its market leadership remains unshaken? How can it compete with a large number of new competitive models using its existing products? How can it ensure that its profitability does not decline significantly? Failing to address any of these questions properly could lead to a loss of trust in the capital market for Tesla, resulting in limited investment and difficulties in the expansion phase. In the midst of an aggressive expansion phase, BYD will complete product coverage across all price segments, ranging from below 100,000 renminbi to over 1 million RMB, in 2024. The first generation of high-end luxury models will all be launched, making BYD globally competitive. However, in the process of achieving this layout, BYD must improve cost efficiency and maintain a low-cost advantage. It should also be wary of the risks of a cooling automotive market, avoiding excessive financial expansion and enhancing risk resistance. Additionally, as the level of automotive intelligence increases, the importance of high-performance chips and software capabilities rises. BYD should be vigilant about the risks of chip shortages and prepare alternative solutions as early as possible. The inevitable head-on collision in 2024, whether between Tesla and BYD, even if one loses, they will not be eliminated from the competition. After all, the runner-up is still capable of becoming an automotive giant in the new era. In fact, it is other automakers who are most concerned about the outcome of their competition. After all, history has repeated itself many times, with the third-place contender often losing out when the top two clash. Okay, that's all for today. Please put your comments below, and share your insightful ideas with other people. Do you want to learn about more auto stories? Please keep following our channel and like our videos. Thank you so much for your continuous support. Your precious time with us is highly appreciated. See you.